Hey, good morning, good afternoon. Let me make sure I'm able to hear you guys. Too much outside noise. Let's close that window. All right, let's get through the technicalities first. Audio good. You're able to see the screen. Microphone doesn't look to be muted, so we should be good. Great. Okay. Uh, can someone just say hi? I just want to make sure that audio at my end is correct.
Good morning, Vivek.
Good.
I,
All righty. Yeah, all good, all good.
I'll actually
So,
be right back.
sure. Priyanka, which time zone are you in?
Same as you. I'm in Bay Area as well. I'm in Fremont.
Oh, you're in Fremont.
Yeah.
Oh, okay, okay. I get to spend some time in Fremont because I have to take my daughter
Oh,
multiple times a week.
I see.
I drive through Fremont all the
City.
time.
Yeah.
We can we can do our meetup in Fremont. By the
I
way, I
see.
attended. I think it was what last Saturday or Sunday. I was in Fremont again because to take my daughter and I had 3 hours to kill. And and then I looked at, okay, what can I do? I went to Meetup and look for any investing meetup. And then there was one in that Hilton Garden Inn on that Mission Boulevard. Yeah.
Hmm.
I just popped in there. There were like four people. Okay, we talked.
Oh, were there? Because one time I went there and there is no meetup here.
Oh no, so that was my first. I just joined the group and joined the meetup. And the folks who told me, like someone came there and he told that he had been there 3 times earlier and there was no one. And even while we were the host didn't show up.
Oh,
But
really?
yeah, but four people like me had showed up, and then we just talked. Yeah.
Nice.
All right. Okay. While we wait for others, and also I just got my coffee, so I need my caffeine before we get started. What's up on your side? I see some comment from Samuel. Sam says, how can Weaver 23 Me Rivian go bankrupt? This is not in business. Weaver can cancel current stock share. If you don't make money, there is no reason that you cannot go bankrupt. Revenue doesn't matter. At the end of the day, you also need to be cash flow positive. And that is why I start paying attention in terms of are you generating operating cash or not, right? In 2021, a lot of companies were surviving because they had external ventilator attached to them, which was zero interest rate, and you could borrow money, an insane amount of money to pay to your vendors, to pay to your employees, to pay to your suppliers, etc. But now the interest rates have come high, and if you are not being able to generate cash from your operations, and you cannot afford to borrow at 6%, 7% interest rates, you can't pay your vendors on stock, right? To your employees, you can say, I'll give you stock options because they don't have cash. You can't pay your marketing agency, okay, let's take a stock option. Or you can't pay them in depreciation, right? So start paying attention to operating cash flow than to just net profit, because net profit, you can still have a net income and can go bankrupt. And people sometimes say, how can we go bankrupt? This company had this many assets on the balance sheet, or they had a net income. But net income can be gamed. You could change your depreciation period, useful life period, and I know some of companies do that. But you can't pay your supplier with depreciation, right? You need cash to pay to them or to your lenders. So I've not looked at, I mean, WeWork, we all know what happened with them. Like, and WeWork is prime example of why, if sometimes you see me talking very negatively on Wall Street firms, one reason, like WeWork is a prime example. Wall Street firms work for themselves, not for us, not for retail investors. Right? They try to push this company at $42 billion. Right? All the bankers like JP Morgan Chase, JP Morgans of the world were out there touting this WeWork as a next tech company, next revolution, and asking their investors to buy WeWork shares. And for whatever reason, those analysts were able to justify $42 billion because they get paid, in hundreds of millions of dollars in fee. Good thing is that if you're coming public, you have to create an S1 document. If you lie on S1 document, that's like a kind of a felony. So once we went through the S1 document, I'm like, oh gosh, I'm not touching this. And eventually, you know, the public is you can't fool public all the time. And they realize that it's not a tech company. It's eventually it's a real estate business, and it's a upside down, business model. You are the basically WeWork was tying into long-term liabilities and short-term assets, the worst way to do a business. And their IPO was canceled. No one wanted to put any money. And the same bankers were not even able to give them money at $8 billion when we were trying to raise money. The same bankers were not even giving them money at $8 billion, but they were ready to throw and push the shares onto the public at $42 billion. So yeah, pardon me if I sometimes come out too negative around Wall Street bankers. They fulfill a role, but I mean, not going against them, guys. They have to make their money, right? So you have to be careful for yourself. So don't pick up any Wall Street report and say, oh, man, this analyst is talking so great about these companies. There's a bullish signal. All the analyst ratings are bullish about a company. You don't know what's behind the scenes. So that's why I'm like, yeah, we should do our own judgment. We should do our own work. So 23andMe, again, 23andMe, I don't know what. So the only reason on 23andMe, I would have thought that they would survive if they can pivot towards the healthcare segment. Because trying to figure out your genealogy, trying to figure out where your ancestors came from, is like a one-time work, right? You did it once and you're done with it. Number one, I don't know how many people are like that interested to know. Like, I don't care a damn if I have a like 0.1% of Irish blood in me or some European blood in me. Who cares? I don't, you know. I know my parents, my grandparents, my great grandparents, that I'm done with it. But I actually know up to 6 generations. We built a family chart with the help of my grandparents. But I like beyond that, I don't see the need. So only need which I thought 23andMe could do is that because maybe they can use this data and some healthcare company can use it to figure out are you predisposed to certain medical conditions or not. And I don't know, they have not been able to pivot into that direction. So otherwise, that was like a novelty stuff. Like you use it once and there is no need to do that test again. So the business model was different. Rivian, I don't know, Rivian has not gone bankrupt. Like you've heard me earlier, if any other EV, US based EV, if I want to pick another shares of pure EV company beyond Tesla, maybe I look at Rivian. I have not bought anything yet, but Rivian has got a backing from Amazon. Amazon has investment in Rivian. Amazon also had pre-orders with Rivian, but all the EV companies are going through a tough time. I mean, look at Tesla. What I mean, like Tesla is down. Okay, let me just fire up Thinkorswim. Tesla is down what, 40% or 50? 50%? They're down big. And not only Tesla, even BYD, their sales were down. The companies in Europe, their sales are down. So EV is having tough time across the world. And yeah, Rivian, sure, they're also going through their tough times. But I have not looked at is Rivian, is there a chance for them to go bankrupt? I don't know. I don't need any more EV exposure right now. I just started building position in Tesla, and I'm pretty, for now, I'm good with the Tesla position. So let me just bring up and Okay, come on. Let's see Tesla. Yeah, Tesla is down 41% year to date. Right. And whereas S&P is up 5%, Tesla is down 41%. So that does say something about what's happening to the overall EV companies. I mean, and this week hasn't been great for any of, I think, for stock market in general, and specifically the long duration, or I would say the companies that probably generate profit later on, mostly the tech companies. This week hasn't been good.
Vivek,
Yeah.
do you know if Elon Musk has been unfocused? I mean, ever since he entered the bid to buy let's see, what is it?
Twitter.
Yeah, he's been totally unfocused. I mean, was he that way from 2013 to 2020?
So even you go back like 4 years before, since we started these meetups, I've never been a fan of Elon. I mean, he's a great CEO, but he's not that shareholder friendly, right? One of the big risks, if I have on Tesla, is the eccentricity of the CEO, or in terms you'll call it as a key person risk. There is a huge key person risk on Tesla. So you have to be really careful. Elon is Elon. He's a genius and he runs multiple companies. And remember when Jack Dorsey was running Square and Twitter together, as long as shares were fine, the investors were okay. Once the Square shares started to go down, investors started to clamor for the blood of Jack Dorsey, saying, "Oh, you guys, like, CEO of two companies, you are dividing your attention. Square is not getting the attention that it needs, and should divest." And eventually, Jack Dorsey gave up Twitter. As long as the investors make money in Tesla, nobody will say anything to Elon, but let them start to lose money. You will see these narratives to come out saying Elon is not focused. He's not, the corporate governance sucks, which it does. The board of directors is in pockets of Elon, so there is actually no real shareholder voice in board of directors. So yeah, but I mean, he has been able to pull it through for so many years, and investors have given him slack for doing it. It's again, the fact is the narrative, the price drives the narrative. So narrative in industry will change if the shares do not perform. So that's why I never not invested or in Tesla for like many years. But now at some point of a time you say, okay, maybe the valuation start to look compelling. I'm not saying it's too compelling, but yeah, it's much better than what it was earlier. And now I can start to build some position in it. NICE versus Palantir. That's a financial services company. Naresh, did you mean to say anything else? How are
I
comparing?
think I was looking at online. I think NICE is a similar to like they work. It's a like a data analytics company, and
Yeah,
they
yeah.
also do some kind of like a surveillance as well. It's an Israel-based company.
Maybe are we looking at different company? I know one nice. It's a New York-based company which actually bought Actimize. Um, but I didn't know that. I know that's a data analytics, and in my previous life, I dealt with NICE as a company. I know one of my friends still works with NICE, but that's more on financial crimes. They run their analytics and AI models to figure out any financial frauds, etc. Is this the company you're referring to?
No, I think it's not this company. It's
Okay.
NICE is a Israel-based company. Um, if you search for
Nice
NICE,
systems.
the ticker, it's an ADR basically.
Okay, so Yeah. All right. So in any case, I've never looked into this company or so I have no idea about comparing it with Palantir. The other company which I am little interested, but that's not in public markets, so I can't invest in because I don't want to invest in private markets, is Anduril, right? So they are kind of getting similar uh, mission as Palantir. And Anduril is founded by Jack Palmer, who also founded Oculus, if I remember correctly. And I mean, recently I saw some videos around the demonstration of their product, uh, which basically it's kind of a reusable missiles, can go out and kill, drones, which and can come back. So you don't spend millions, tens of millions of dollars on killing, uh, the some cheap drones, which is what I think Iran had done. So recent, and this is also we saw last week why market had some turbulences because of a geopolitical conflict. Iran, Israel, Iran launched what 350 drones plus missiles all together, and except one, all of them were intercepted by US and its allies like France, UK, and were destroyed in air. So all I heard was there was one casualty, and but Iran is claiming that they won to some extent because they say, hey, have you spent hundreds of millions of dollars, if not billions, in destroying our cheap drones. Right? So then I was thinking, that was exactly the use case that Anduril is trying to address is reusable kind of those missiles, which even once you fire, will go out and attack those drones and can come back and you can reuse it. Otherwise, like countries could uh, use these cheap drones. And if you were to deploy super expensive these anti-drones weapons, you might be economically getting bankrupt. So military warfare with economy. But that's a company which I want to keep in radar is Android. But maybe nice. I'll see. I never looked at that. If you have Tesla, adding more to DC or waiting to add? So I always had. So here's my story on Tesla. I think first time I thought I'll buy Tesla when it'll hit like 200, near to 200. So I had a short put spread with 200. I bought there. Then I again put it at 180, which I got now. That was expiring in April. And now I have a short put spread, which is expiring in May at a short strike of 150. So once I reach my position size, which I want to have a Tesla, I'll stop accumulating it. But that's currently my strategy. And again, I'll start selling covered calls also so that I can continuously reduce the cost basis. Tesla 99 next, I have no idea. Right. So it's again, it's a narrative follows the stock price. Now Tesla is not performing. It's down like 40% for a year. And media and all the analysis out there gunning for blood of Tesla and for Elon Musk. Uh, yeah, Musk is unforgettable. I think we already talked about it. Okay, prior to 2020, okay, Musk had gained reputation for his board. Yeah. Sam says to leave at 11:15. That reminds me, I have to leave at 11:30 because 11:30 we have to start, I have to travel to Mountain House today to meet for a social gathering. So, and it then takes almost, even on a weekend, it will take more than an hour. So I have to leave at 11:30. Okay, so probably we'll have a little, shorter session today. Tesla covered calls very risky, as so drastic with every comment from. Yeah, so you can do a call spreads, right? Not do, let's say, if you really, really don't want your a Tesla share gets called away, but you still want to participate and make sure that you can continuously reduce the cost basis, maybe do call spreads. So that reminds me, I'm gonna cover all these different variations of selling calls, I think in our bootcamp number 2. So hang on to that. Lucky the guy that created Oculus and FB screwed him. Yeah. Oh, there's a book on it that I didn't know. So maybe I'll find about it. Yeah. All right. What else? So today, we had now earnings season is back. So I'm gonna review some earnings from TSMC, ASML, and I think some of these semiconductor companies, they spoiled the party. They threw cold water, and now the hangover is over. We'll see. Look, like Nvidia was down 10%. So we're gonna look at what happened to the semiconductor this week, and get deeper into TSMC and ASML earnings to see, are they telling us anything, right? And of course, our session from last week, we have our remaining stuff, which is to talk about PayPal. What is going on with Melly? I mean, nothing. It's a general market weakness, and if dollar becomes a little stronger, the companies which operate non-dollar, outside dollar, they become, they strong dollar is a headwind for them, and Malay's majority of revenue come from Brazil, Argentina, Chile, and Mexico. So if dollar becomes stronger, you'll see the foreign company stocks will little bit can sell off. But I have no concerns on Malay. Meta is on fire. Yeah, they released what, Llama 3, and he's trying to now, to basically not commit the same mistake that he did on the mobile stuff. They want to be operating system of AI. So we'll see. The accidental billionaire. Okay. Thank you. All right. So let's get started. So this is what I think. Yeah, I didn't miss any other question, right? Cool. So yeah, this is how the market did in this week. Even the biggest were down. Like Nvidia for the week was down 13%. Like I think suddenly people have started to realize that, come on, Nvidia only designed the chips. They don't manufacture chips, they just design the chips. And other companies like Apple, Microsoft, Google, Amazon, who are actually consumers or customers of Nvidia chips, have got enough technical strength to design their own chips, right? So all of them have projects underway to design their own chips, because again, probably I'm gonna talk it ad nauseum, is your margin is my opportunity. You cannot have Nvidia take 50-60% profit margins for next 10 years. And that's what is priced into the stock price already. So there will be competition, and we'll start to see competition coming in. And little bit, I believe the whole semi sector was red for the week. So overall, even Apple is down 6.5% on the news of smartphone weakness in China. Google, Meta, I think Google Meta was down, I think on Friday. There was a news around because of Apple. Meta got screwed by Apple again. How many times can that happen? But in this case, this week it was no, I think the Chinese government, state government, had asked Apple to remove WhatsApp from, I think WhatsApp as well as Threads from App Store. So there we go. You remove WhatsApp and both like are Meta properties. So we saw some weakness in Meta on Friday after that news came in and Apple had removed this. Yeah, other than that, I think Tesla was down what 14% for a week. Yeah, it's not Tesla is going down like a free beer for now. So we'll see how long this continues. On the other hand, I think healthcare did well. United Health was up 14%, so that held up Dow. Of all the three indices, S&P was red. The Nasdaq was red, but your Dow Jones ended up green on Friday, largely helped by United Health. And when there is a little fear in market, or we see the consumer staples, those things they do well. So that's why I say P&G, Pepsi, Coca-Cola, those companies are doing good. So that's overall. And why is market on tenterhooks and why there is so much of volatility in market? Because again, I think every Fed governor is coming and talking about it. Rate cuts? What rate cuts? What even talking about rate cuts? Economy is doing great. Inflation is still high and the job market is still tight. So forget rate cuts. And now there's been talks that we may actually get a rate hike. Who knows? So how quickly the narrative start to change from 7 rate cuts at the start of a year to 3 rate cuts, then 2 rate cuts, and now talking about 1 rate cut, and someone says maybe we'll have a rate hike. So this is an interesting chart from the compound, which looks at once when the performance of S&P 500 when 10-year a treasury note crosses 5%. And right now 10-year is at where? TNX, let's look at TNX. 10-year is at 4.378%. So still some time will go, but getting inching closer to 5%. And if it gets closer to 5%, in all periods since 1978, so this light blue is how S&P has performed after a 10-year crosses 5%. The 3 months average, it is down almost 2%. 6 months after the 10-year has crossed 5%, S&P average performance 6 months later is down 6%. So I'm not surprised that if treasuries continue to stay, if interest rate continues to stay higher, market will start to see this weakness. Because remember, market started pricing in 7 rate cuts. And what S&P at some point of a time was up 12% for the year, right? Which is like, and we used to talk about it a little bit, laugh about it, saying, guys, we are only 3 months and S&P is up 12%. Right? So too much too soon. These are like results that you get in a year, and we were able to see it within 3 months because the expectation was, yeah, rate cuts we'll have a multiple rate cuts. Now that tailwind has gone out, we are seeing S&P returning to how it should be, right? Which is, I think now it's up like 5% or 6%. She says TNX is 46.15. I don't know, my TOS shows TNX 43.78. Okay, CGI. What's that? Ah, yes. Cool. Yep. Anyway, yeah, so I think that's so in October last year, that's where, remember October? So market started to sell off from July to October, when the 10-year was almost 5%. So now I think market is starting to dread the same scenario that, oh my gosh, 10-year is going to go up to 5%. So I think that's probably the biggest reason that we are seeing weakness in the market. And if treasury is strong, why should anyone invest in the market? right? That's the question. When I say anyone, specifically the big money, right? Family houses, pension funds, endowment funds, those why should they invest in the stock market when they can make risk-free 5%? So performance perspective, S&P, yeah, up nearly 5% year to date. Now it little feels like little more a normal year. Surprisingly, real estate, I shouldn't say surprisingly, I mean, because of a commercial real estate is down almost 11% for the year. Can think of it. And yesterday, I was listening to an episode on the Wall Street Journal podcast about something called a doom loop. That's going around in many cities of US in downtown area. Yeah, if you're in real estate business, they would probably know Jay Mehta. He's in real estate. So yesterday was an episode that they were talking about one building, AT&T building in St. Louis, which was sold at 200, close to $200 million in 2006 or something. And most recently, that same building, and it's got 1 million square feet area, got sold at $3 million. $3 million. I never think, I thought, isn't $3 per square feet is a rental rate? Not really, the rate at which you sell the property. But yeah, in many cities, these commercial real estates have, having a tough time. And I guess that's why when you look at overall real estate as a sector, that's underperforming. But I think commercial as well as the housing are completely maybe two different pictures. Yeah, this is yeah. So B's, and I think you're referring probably to the housing inventory, but this is CRE. I think this negative 11% is all driven by CRE. Yeah. All right. A quick note on semiconductor. And I thought based on what we saw on Friday, semiconductor sector needs to conduct itself. This is did I put it the wrong one? I picked it as a QQQ. Anyway, so let's what I wanted to say was Nvidia was down but 10% on Friday, like almost from 820 to 760. Nvidia was down 10%. SMCI was down 22%. It's like 1/5 of the market cap just vanished in a few hours on Friday. Others, if you look at overall semiconductor, it wasn't a good day on Friday. So if you had a lot of semiconductor companies in your portfolio, Friday would have been a tough day. It's just a day. But Broadcom was down almost 4%. AMD is now 146. I think not long ago it was more than $200. Qualcomm, Intel, Texas Instruments, Micron, ADI is, I think, analog devices, NXP, more for automotive chips, MCHP, I think, is microchip, Manpower, On Semiconductor, Swarovski, Qorvo, the whole red. So yeah, so that was, I think, the worst performing sector across I mean, it's semiconductor is not really an S&P sector. There are 11 sectors in S&P, which were these, but if you call it as a subsector and the companies in it, are in different S&P sector, but this was the worst performing area.
We have a cover story of Barron's this week for NVIDIA. NVIDIA's Barron's story. It should be interesting read to talk about the cloud giants and venture backed and other chip makers, everything. Everybody wanting to catch up now with the competition, not nothing like that. Should be interesting read.
Sorry, which one?
Barron's has a cover story on chasing NVIDIA.
Okay.
this week. Should be interesting read.
Okay, yeah, maybe once I'll get my hand on it, I'll go there. But yeah, I mean, I don't. Again, I have a love-hate relationship with Nvidia. As you guys know, I sold my 2/3 of my position. I'm still holding 1/3 because Nvidia is still higher than what I think it should be. But markets can do whatever they can do. So I'll wait. So last tranche that I sold, the 1/3 which I sold was on I think 700 or 695. It's still higher than where I sold it. So I'll still wait. SMCI, Ross's SMCI got crushed. Yeah, I never understood why SMCI even went so high. Like we looked at SMCI. This SMCI is not a software kind of a company, right? It is still in I would say high cap. It's a when I say high cap, I mean it's not like an asset light company, which like many software companies are, but this is asset heavy company, and they don't have those margin profile which the software companies have, right? So yeah, sure, they had a great revenue growth. That's great, but what's the return on investment, right? So if you look at their operating margins for SMCI, nowhere close to like any software company would be, and the stock was like just going through the roof. And I could never wrap my head around it. Why does SMCI deserve such a high valuation? And let's look at what's their operating margins right now are. Finviz SMCI. Because I remember I looked at this and the profile wasn't that great. 9.4% operating margin. 9.4%. You're getting a software like valuation, at least have your business profile match with that, right? And pick up let's say Microsoft. Any good software company, their operating margins should be close to 50-60%, 44%, right? Not 50, yeah, close to 45-44%. Yeah, because their business model is different. And that's the reason why many of these tech companies deserve higher valuation than so-called old economy companies, right? Their margin profile is completely different. So anyway, so I think SMCI is still too overvalued, but that's what happens in these hype, right? And we don't know how long will it continue, or so you really have to be very careful if you're trying to ride through this roller coaster. So I never got on the roller coaster, so I'm still okay. Do I complain about missing it? No, I don't. I mean, I don't have to be too greedy. At some point of a time, you really have to think for yourself and not trying to join the herd. Yeah, I was okay. I'll wait. Nvidia October 22 was something like $120 per share. Yeah. And I think I bought Nvidia at 180, sold some at 420. That was my first tranche. And then another one at 700. I'm still holding some. Any thoughts on ARM? I haven't looked at ARM in recent times, but we did do a review of ARM when their S1 came out. So let me just see if I can pull that out. But I'll take a note of ARM. Maybe let's do a revisit of ARM next week. I took the note. SOXL, SOXS, R700 ETF top 10. Yeah, okay. That's fine. SMC got into account. Yeah, SMC had theirs. They were fined by SEC. We talked about it earlier. They provide server infrastructure. So yeah, you're right. They actually and like they've been doing this for years, and not only for Nvidia but for other companies also. Basically, once you design your own chips and all that stuff, those need to be put on the chip boards or on the motherboard. Then those you need to have those server racks and all that. That's all SMCI does. It creates the server rack. So if I'm Meta and I need to build my data center, and SMCI is expert in putting together those hardware components in the configuration that I want in the chips that I have created. So they exactly know how much of a cooling will be needed, what the ventilation system should be, how the rack should be created, how distance, all that crap, all that stuff to set up the infrastructure in data center. So it's like a contractor company, right? It's not a software company. But when the AI hype is there, anyone who has to touch because they were assembling and putting together AI chips in the rack, yeah, you get you get the same valuation. uh, there is another book on tulip mint and other stock market frenzies. Yeah. Anyway, I mean, this is not the first time we've seen these frenzies over and over again. So we are so back. But good thing is, last week I love this chart. The fear and greed index, finally after a few weeks I've been waiting when the market will move into fear. And I know last week it was still neutral. And I said, you know what? I want to wait until it moves into fear category to start becoming a little bullish, right? So now this week I closed many of my short delta positions. So basically to make my portfolio a little more bullish than it had been in previous week. So now I'm going a little bit slow on hedging, and okay with little more bullish tilt for now. Remember, be greedy when others are fearful, and be cautious when others are greedy. So I think now for me, and again, not going all in, but I think I feel a little more comfortable in having little more bullish tilt on my portfolio this week onwards than I would have been like last 3-4 weeks, wherein I had a lot of short delta positions. Okay, Isnel, okay, we got some Bitcoin chart and Nvidia chart. Let me just pull that. Bitcoin, Tulip Mania, Nvidia. So yeah, finally, Nvidia also doesn't grow to the moon. But probably Bitcoin has grown to the moon so far, but we'll see how long that stays. So yeah, since we talked about Bitcoin, let me also update you. So we had the halving that was supposed to happen on Friday, which obviously did. So there was a halving event, or called it halvening. I don't know what exactly the terminology is, but it went through that process yesterday, close to, I think, maybe around 4 p.m. Pacific time. I was driving, otherwise I would have been, would wanted to get onto some YouTube channel to see if there are any halving parties, but I couldn't because I was driving. So that's why you see sudden jump on Bitcoin pricing, and that's been a very volatile stock. And sometimes I feel that because over the weekend market is closed, and this whole conflict between Iran and Israel happened over the weekend. When I looked at the Bitcoin last week, I'm like, it fell down to 59. I'm like, something has happened in the world. And then later on, I realized it was because of that geopolitical conflict. And then moments late, a few hours later, when there was news around that, hey, both Israel and Iran, they did what they wanted to do because obviously, your population demands that, but you really don't want to go to the extreme level to cause full-fledged war. So yeah, both of them will flex their muscles and say, yeah, we want some. Israel will say, we want some portion of it. Now Israel also attacked uh, Iran, very limited and controlled way. So both the countries did what they wanted to do, so that they have a face-saving measure right now. And then we saw, Bitcoin started going up. Uh, the beauty of this is this trades 24/7. So you can also check during the weekend. But anyway, That apart, we see this huge jump of, yeah, so this was on, this is where there was some conflict between Israel and Iran. And now this recent jump that you see is all because of the halving. And I don't know how much this will continue, but the halving event, which is basically the rewards that are generated whenever any miner completes and adds a block to the blockchain, they get rewarded by creation of new bitcoins. In that rewards, it's cut into half every approximately 4 years, scientifically every 210,000 blocks. So Friday around around 4 p.m. ish, maybe a little later, 810,000th block was mined, which means there was a fourth halving event. So first one happened in 2012, where the reward was cut down from 50th to 25th to 25. Second halving happened on 2012 plus for 2016, where it was cut down from 25 to 12 and a half. And then the third one happened on 2020, where the supplies were cut down to 6.25. And now, if you anyone mining Bitcoin, once they mine the Bitcoin, they'll get rewarded 3.125, cut down into half again. So James says double the energy needed for mining. Uh, Not necessary. I know this is what the general narrative is, because now to mine the same amount of Bitcoin, you may need double energy. I have a little more of I have more concerns on this one, and that's an unpopular opinion. Um, but we want to talk about, I can give you my opinion is, I'm a little concerned that if because the reward has gone down and if the price of Bitcoin doesn't go higher, many of the miners will find it really difficult to continue mining Bitcoin. Because from a miner perspective, I earn in Bitcoin, then I can sell some of the Bitcoin to run my operations, right? They need to pay for electricity generation and all that stuff. And now if the Bitcoin price doesn't go high, I won't be able to run my operations. Then many of smaller miners may just shut down. They may just go out of business or maybe bought on by the big miners, right? And that if the miners go out of business, then who's going to secure the blockchain? So today, the reason why we say that, it's secure, it because if you have to attack Bitcoin blockchain, you need to have at least 51% of the hash rate, right? And to have that 51% of the available network hash rate, you need to really, really spend, a few billions of dollars. But if we see miners going out of business, because if the Bitcoin price doesn't go high and they can't afford to run the mining operations, then the security that these miners provide to the blockchain, is could be at risk. That's one thought I have. I don't know, who will jump, whether it will come true or not, but hopefully, uh, maybe the price will go high and then everyone will be happy. But sorry?
You brought up Gaza. Why us as traders should care about Gaza in the Israel situation? I still don't get it. Why do we care? Why do you care?
About what's happening in Gaza?
Yeah. I mean, I don't get it. I mean, I try to. There's so much stuff out there. I try to not to get. But what's the point? I mean, how does it affect us? I mean, really, I don't understand.
I mean, if it gets into full-fledged conflict, that's going to be bad for the world. That's what I care about. And I know there are different people have different opinion. We saw what happened on Google this week. Many of our Google employees, they staged protest around you know, they were protesting around why Google should be involved in Israel. And 28 people that were protesting on Google properties. Finally, Google did a good job. Google fired all those 28 employees. You have a right to protest because you may have some values that you hold very near and dear. Do it on your own dime and on your own property. Don't do it on a Google's property. I think the message was clear. As a corporate, they have a responsibility. And my, if I were one of those employees, I mean, I would say, go and don't work for Google, guys. Don't tell Google not to do this. Google is an adult. You are an adult. If you don't like what Google is doing, there are many other companies. Go and work for an NGO, which will further your cause of, bringing peace to this conflict. So I don't know. People, I think wherever there is a controversy, a lot of folks jump in. So, but I want to focus this on investing. And yeah, if you have other opinions around what's happening in or what US is doing in this conflict, let's take it outside this. They will focus on altcoins or stake-based coins. Yeah, I mean, when it comes to the altcoins, yeah, the different stories. My whole idea around this whole crypto stuff right now is the biggest brother is Bitcoin. None of the big firms are into altcoins. None of the pension funds or institutional are gonna get into altcoins. Right? So Bitcoin right now is the only asset which has got some legitimacy among the big money managers. So others are the gambling chips, right? We can do whatever we want to. Those are like penny stocks. They'll go up 1,000%, and then you never know when they will disappear. Some altcoins probably have some value. Ethereum is one of them. They're trying hard to get an ETF out. We'll see what happens over there. But when it comes to the big money, I think Bitcoin is the only asset from the crypto asset class which has got some respect. All others are still, I think, a plaything of retail investors. So a quick look at treasuries, because the rates are not coming down. And if you're holding any money in savings account, please do yourself a favor. If you don't want to take any risk in stock market, that's fine. Treasuries itself is giving much better return. Or move away from these money center banks like Bank of America, Wells Fargo, Chases, to other banks which provide you better rate of return. And now it has started to show up in these banking earnings that folks are they have to start providing better interest rates. Currently, none of them are. But even if you don't want to go into smaller tier banks, because hey, those banks could go bankrupt, you have first of all, up to 250K is FDIC insured. There are CDs that you can get in the banks, or there are like risk-free treasuries that you can get. So I just pulled up, like yesterday, I was pulling up what's the latest auctions if we buy directly from treasuries. Like 4 week is giving you like 5.28% per annum. So if you have some funds that you don't need for 4 week, 8 week, 17 week, or next year, you can easily make close to 5%. And this is like the least risky asset in the world, US treasuries, right? The central banks of the world hold this asset on their reserve because this is considered to be the as risk-free as you can get. And you can make 5%. Go longer, like 10-year. That auction, I think, happened 4th, 15th, yielded like 4.5%. So if you are, let's say, going to the standard, the 4% withdrawal rule, if you're retired and you don't want to take any risk with your investment, you could just buy this 10-year and you can make 4.5% risk-free. So even if you don't want to open an account with Treasury Direct, you can still buy these treasuries on your brokerage firm website. So I just looked at TD Ameritrade, and many of these, are being sold in the secondary market. And I was looking at, okay, how much these treasuries are selling up for. So these are like a 10-year guess. Oh, geez, I forgot. I didn't put which one. Yeah, these are notes. So that will be notes means between 2 to 10 year. So those are selling for 5% yield to maturity. Treasury bonds are like 10-year above. So these are like which are selling at like 4.5, close to 4.5, 4.6%, right? So do yourself a favor, do a little bit of research. You'll probably spend, half an hour, but it could earn you hundreds of dollars per year, rather than leaving that money in the savings account, which you don't need, let's say, for next 1 month, 2 month, etc. Of course, if you need money to pay your bills, yeah, keep it in your savings account. But I think given the interest rate where they are right now, keeping money in a savings account is committing a harakiri. So yeah, I mean, put your money to use and risk free. I'm not even talking about the stock market. These all are risk free. Yeah, BS and say all sort of CDs to pick from. Exactly. Their CDs are offering 5%. And again, some may be having some minimum cap requirement that you should check, but making 4% risk free in today's world is like, you can do that in sleep. You don't really have to go out on the risk curve to try to make 4%. This wasn't the case 4 years earlier, right? You have to invest in the stock market to get to 4%. But if you now want to make 4%, because you're retired, you think, 4%, you can live on that income. Sure. You have $1 million, you can put in and make 40 grand, risk free. Fidelity gave 5% for the parked money. No need to lock the money. Yeah, there are some savings account. 3 months of CDs at 5.5%. So my only concern about these 3 months, 2 months is you have something called a reinvestment risk, right? Once it matures after 3 months, what happens? If the Fed has cut down the rates, then you start hunting for where should I invest the money right now. So me personally, rather than picking 3 months CD at 5.5%, I would pick up 4.5% for next 10 years. If I'm comfortable to lock it for 10 years, because then I know that for sure I'm gonna get 4.5% for next 10 years. 3 month CD, every 3 months, I have to figure out what if the Fed has cut down the interest rate. Let's say in 2026 it goes to zero, then I'm out of luck. But that 10-year will continue to pay me 4.5%. So that's a decision that you should make. Is there a penalty-free CD? I think Ally generally have penalty-free CDs for 11 months, but not longer duration, because they don't want to take a longer, committing themselves to a higher rate right now. But they have for 11 months, I guess. Buy the bonds and do the covered call on them, best of both worlds. Yeah, I've been doing TLT, right? So I have a put spread and I have a covered call on TLT right now. 300K is a good starting point for a livable wage for a family of 4 in San Francisco, but it might just get you by. Okay, so now and to live comfortably, 500,000. Okay, I'm below poverty line in San Francisco. No, I think, yeah, I just don't subscribe to like 300K is what we'll need. Then probably it's not, you don't have an income problem, you have a spending problem. Even on San Francisco. If you think you need minimum 300K to survive by, and that's my personal opinion, is we have a spending problem, not an income problem. So, okay. Oh gosh, we're almost 11. I've got only 30 minutes. So maybe we'll do PayPal first and then earnings. Move to Texas. No, I think 300K, you can easily survive in San Francisco. I don't subscribe saying you can't. Okay, so what did I buy and sell? Bought a little bit of Mercado Libre because, earlier some of my shares I had to sell because of my call spread was in the money. So I sold them at around $1,600. Now I'm refilling my tank. Plus, opportunistically I'm buying because, yeah, the market is giving me that opportunity. FBTC, I bought, when I saw that, it was, I think, what, 54 or something. I picked some TSM. again, refilling the tank. I had sold some shares around 144 or something because my short call was in the money, and now the shares have come down, refilling that tank. Tesla, I had to buy because I talked about Tesla earlier. I had a 180, 160 short put spread. So obviously shares were like lower than 160. So I closed that, bought some shares. CRWD, CrowdStrike. Again, I had put this put spread when CrowdStrike was at around 340. And I was like, oh, I don't want to buy at 340. So I had, I think 310 and $300, $10 wide put spread. So I picked some CrowdStrike and JMIA. Shares were called away earlier at $5.5. So I put a short put, refilling that same tank. So I think except Mercado Libre and FBTC and Tesla, I'm just some of the shares were got called away. Now I'm buying them back, right? So that's the beauty of selling options. You sell it when it goes higher, and then you continue to sell put spread. And when it comes down, you buy it back. So all the premium that I got, that's like reduces the cost basis of me owning those shares. What got sold this week? I had a SLV, I had a covered call, got assigned. Earlier, I'd acquired it at 22 by selling short put, and then I sold a covered call at 23, and now those got called away because the stock is much higher than 23. That's fine. I'll again start selling short put at 23. So that's again, don't buy or sell because this happened. The reason I share is because I talk about these stocks. So and I want to be transparent around what I did on my this is my non 401k account, right? So that you know. I don't want to suddenly come and say, the stock went high. Oh, I bought it. If I didn't share here, means I never bought it. So quick update on the bootcamp. I know, and thank you for joining. I know many of you were in the bootcamp. We had our drill first completed last Wednesday, where we talked about very basic intro to bootcamp, and then we looked at this was basically selling put versus putting a limit buy order, and what is what, and we went through the pros and cons, look at different scenarios. I also sent an email. Someone please confirm that you did receive email. Let me reach out. Should I? Okay, Sam says yes. So he did receive email. Okay, so you got your homework cut out for you. Please do the homework. I also shared couple of those stuff in this boot camp channel, saying, hey, this is what I'm doing in the paper trading account. Just for your learning perspective, I did a couple of those trades doing the short put, and we'll track during the boot camp on how did these things did, and then if something goes against, we'll learn how to manage all the stuff, right? So things that I don't go deep into Wednesday session because otherwise it will eat up whole time of Wednesday. We're gonna cover that in boot camp. So please do your homework. Get a paper trading account. That's the only way you're gonna learn. Okay? You can attend all these meetings, that's fine, but unless you actually do the stuff, it's very difficult to learn. And either you can learn it for free on the bootcamp, or yesterday I came across some investment seminar that's happening from May 7th to May 8th in San Francisco, and one of the session was options, and that guy is covering, I think, 4 or 5 things from the bootcamp, 4 or 5 sessions, and that's you have to pay $300 to attend the 2-hour session, and in which you'll be, all the concept will be pushed down your throat in just 2 hours. Either you can go and pay those $300, or you can learn slowly and steadily, but you have to commit to learning is, join the bootcamp.
Vivek.
Yeah.
That's why I buy, or not why, but I have lots of, like I said, stupid stocks. I can practice my, what you teach us on options on them.
Yep. So our second drill, which is where I'm going to talk about generating monthly income, this is what you sell your calls, and we'll look at what if I don't want to get my shares called away, what can I do? So that will be next Wednesday. Ross, how much are you charging for your boot camp? I'm charging my homework. Oh, it's for free, Ross. This is my 5th time I'm doing this boot camp, and all of them have been free. But you have to commit to doing the homework.
Hey Vivek, I was on vacation. I missed the boot camp first session. Is there a way to get a recording back or
Yes, there is a recording. Let me just. So recording is on my
homework can be there for next this Wednesday? I was
website.
I was traveling to Italy and we stopped over in Copenhagen one more day, Denmark.
Okay. Yeah, so recording is on my website. Let me just.
Okay,
Okay.
no worries. Thank you, thank you.
Yeah, so I'll just show you where the recording will be. Yeah, once you get through the recording, if you're okay, let me just. And again, even if you just register for free, you'll get access to the boot camp. You don't have to pay anything. Yeah, so I uploaded the recording, I think yesterday. I sent out an email after I uploaded it. So we did our drill 1. So the recording is here. It's almost 2 hours long.
Excellent. Thank you.
Okay. Yeah, now for the second session, please sign up. Just doing an RSVP is not enough. You have to sign up because I need the email IDs to send you homework and follow up on that. The other thing is you could join the Slack channel. And again, let me put this link.
Yeah.
And ask questions if you have any um, around the content, or hey, I'm just getting started, this is what I'm doing. That's what I'm saying. You do it on a paper trading, so that there is no capital that you are putting at risk, but just you're going through the motion, try to understand how these things work. If it goes against you, how you will manage and all that stuff. A reason I'm doing just one session per week is going to be 14 weeks, right? It's I'm not going to push down, everything and dump everything in a day or a couple of hours.
So what's the best the kind of paper trade account? I used to trade a different platform. Now I've got TDMA trade, which is Schwab, which TDMA trade will be Schwab right now. You think Thinkorswim is the best one for paper trading?
So Thinkorswim supports paper trading. So if you are a Schwab customer, yeah, pick up Thinkorswim. Don't have to look anywhere else.
Super.
TradeStation also support paper trading. Webull also supports paper trading. I don't know if Robinhood does or not. Anyway, I'm not a big fan of Robinhood when it comes to options because I'll be as we go deeper into it, I'll start talking about option Greeks, how to look at delta, how to look at extrinsic value. I don't even know if Robinhood actually allows you to look at it in a very friendly manner, right? But if we really become serious, those are the things that we will need, right?
Got
So
it. Okay.
cool. Yeah, so register for Bootcamp 2, where we're gonna talk about call options and how to use those to generate monthly income on the stocks that you own, right? Basically called covered calls. But what are the gotchas that you should watch out for? Cool. So that's on the bootcamp. Any questions? Please do the homework. How to submit your homework? Yeah, you can submit your homework on Slack. Just paste it saying, "Hey, this is what I did." So at least I'm ever okay, you did that. And the reason is if you submit it, then in the bootcamp we can actually discuss, what happened, right? Hey, this has gone down, how the pricing has changed. And once we move into, I think it's in the intermediate session, in if it is going against you, how are you going to manage it, right? So if you have your own trade, it'll become much easier for you to follow along in terms of, oh, this is now going against me. Okay, let's see how to try to manage this trade, how to try to salvage it, and things like that, right? So that's why I insist on I'll share some examples, but if I insist on you doing on your own account, will help you to learn it faster. You can go and attend many webinars. There are many or any training sessions. There are people who will charge you a few $1,000s for doing it. Go and attend. But if you don't put it in practice, it's not going to help you. You'll be like me. I've attended 4 beginner session of skis. Every time I go to Tahoe, I attend a beginner session. I've done it 4 times because I never practice. So you don't be like me, okay? So practice it. My trade got melee put assigned at 1435, and then you sold a call for 2 weeks. Yep. All right. Probably okay. Before that, any questions on the bootcamp?
Vivekji, one
Sure.
question. Yeah, on the I got in a Slack, but it is saying it is I need a pro account.
What? Pro account?
Yeah, I don't know why.
Did
I
anyone
cannot
else have
see
a pro? I
many.
saw 4 people now join. Did anyone else have any issues? Because
No, I was able to join without pro account, and I can see the message.
Covered calls. Did you able to see the covered calls channel?
That I haven't checked, but I think the one he is talking about is bootcamp.
Yeah, bootcamp option gig. That's whatever Vivek shared, right?
yeah.
Yes.
I see some of the data and some of the data may not. They're saying maybe it's a old data. Maybe it's
Oh
an
yeah.
old.
So over.
Yeah.
So yeah.
Yeah,
So
those are.
yeah, because that's for me also, right? It's a free
Okay.
channel. Like otherwise, I have to pay per user. I have to pay some bunch of it. So in this free Slack version, any messages which are more than 90 days old, you can't see it. Even I can't see it.
Oh, okay. Okay. This is the standard in that. Okay.
Yeah, so it's basically for me. They ask me, hey, you should upgrade to Pro. I'm like, no, I'm not paying because I'm
No.
like, hey, do it. Yeah,
That can
unless
you tell okay,
unless
Discord?
I don't want to
Discord might
make
be
it.
better, right?
Sorry.
Discord might be better. No restrictions, right?
Yeah, I've not tried Discord. I know many people, especially in the crypto, and
Okay.
they say, hey, Discord or Telegram. Maybe at some point of a time, who knows? I'll switch to Discord. I'm
That's okay.
Gen X guys, right? Like not Gen Z yet. So, but yeah, I'll see Discord. I've not tried that. Anyway, so I think again, this Slack is not. We don't have too much noise. There is hardly any messages around this, but it becomes a little more active when I do these bootcamp sessions, because most of the folks in here, and including I'm not too active because I can't. We're not a full time into this, right? Majority of the folks in these are not full time traders. They are regular, like have their regular day jobs, and once in a while someone will post a message when they get times, and I'm perfectly okay with it. I don't like too noisy chat forums anyway. Okay, let's talk about the topic that I think I wanted to cover even previous week was not able to. Well, let's talk about, is PayPal the next Meta? Right now, we're PayPal. Look at the PayPal stock. PYPL. Oops. PYP. Not PTPL. Let's look at its. Let's look at the last 3 years. Currently, it is down like 80% drawdown if you look at last 3 years of data on PayPal, right? And I think that's going to be, even if you go back last 5 years or 10 years, that's going to be the case. Almost 80% down from its 80% drawdown from where its max value was when everything was going to the roof. PayPal was $310. Now it's sitting at close to $60. So almost 80% drawdown. And the reason it's being compared is same thing happened with Meta, right? So Meta fell from 380 in September 2021 all the way to $88 in November 22, right? Now we're seeing similar thing around PayPal as well. So when it happened with Meta, there's all doom and gloom. The investors were just one sec. It's should be in my closet. Sorry, because we have to go. So did you find it? Okay. All right. Sorry, getting ready for that. Okay, coming back to this. Yeah, because the stock, the price, the narrative starts to follow the price. And when the Meta fell down, all the VCs were calling for heads of Zuckerberg that, there is no shareholder voice in there. All the media was against Zuckerberg, saying, what is he doing? He's just trying to spend all the money in metaverse and not focus and all that also. Everything was questioned. Even the dual class share structure was questioned, right? That because Zuckerberg has got the class of shares, which gives him super voting power, and hence the investors can't replace him. So whole Silicon Valley culture was questioned around, we have these founders who got too much power, so on and so forth. Today, it is now trading at $500. Now, suddenly everyone has forgotten that the founder has got the super voting shares, why the dual class share structure, and now even the new companies that are coming with IPO, everyone is okay with dual class share structure. So this was pioneered by Google. Everyone enjoyed the gains on Google and were okay with it. But obviously when Meta was at 88, they say, oh, that's a bad way. It's not shareholder friendly way. And now recently we look at Rubrik. They have a dual class share structure. Yeah, that's fine. So in any case, so that's almost 500% return in 18 months. So now the questions are, PayPal had the similar stuff. It hit it 310 in July 2021, fell down to 50 in October 23. Now I think that was like maximum drawdown was 85, 86%. Still, it is almost 80% drawdown. The question is, could PayPal have its meta moment or not? And again, I don't know. I don't have any insight. So only thing we can do is to look at business, right? Eventually, long-term short-term stock market is a voting machine, right? Whoever is more popular, creating more noise, wins. Long-term, it's a weighing machine, right? You need to have matter. You need to have a good business model. So let's look at what PayPal has been doing. And we talked about PayPal over past few months. Just gonna revisit that to see if anything has changed. So in June last year, we talked about, and when I said I'm gonna revisit PayPal, we looked at what the share price was. So it was trading at 65. Even now also it is trading pretty close to that, right? Maybe now 62 or something. And when we looked at in terms of from a free cash flow evaluation perspective, I'm like, market is currently pricing in 3% growth in free cash flow over the next 10 years in PayPal. 3% is like an inflation level growth rate. Now, I believe that the PayPal will at least do a little better than inflation. And when you look at a Yahoo Finance and see what's the revenue growth rate that is being, analysts are assuming to be for the next 5 years, is close to 15, 16%, right? Nowhere near 3%. But the stock market, stock price is so doomed that they've assumed that it's like it will grow only at 3%. So we put up some scenarios, right? Let's say it grows at 5%. Then the implied value of the stock should be $76. If it grows at 10%, then the stock should be valued at $110. 15% per annum for the next 10 years, then the intrinsic value of the business or intrinsic value of the stock is $160. Okay, you can take that 15% is, too bullish a scenario. 10% is, yeah, slightly bullish. Even if you think that it can grow its free cash flow by 5%. And the reason I'm picking free cash flow is because it is at a stage where it is being able to generate free cash flow. It is able to return that capital to shareholders. That's why I'm using this as a metric for valuation. I'm not going to use this metric for valuation when it comes to Rubrik or other company which is not focused on that, the different life stage of the company. So, and that's what I said. I think I want to start building position in this because to me it seems that it is undervalued. So lastly, then again we looked at in February during its earnings. So let's go back to its earnings. Revenue beating expectation, total payment volume beating expectation, EPS beat expectations, was up by 61%. Operating margin was the highest of past 5 quarters. If you look at operating margin was 21%, which was like highest of past 5 quarters. Net income was up by 72%, almost $1.4 billion. Operating cash flow, $2.6 billion, was up 64%. So from business perspective, they were doing fine. I mean, it's not a company which is like, okay, it's going to die out, right? It's like a 3% growth is like just an inflation growth. Then we looked at some of the other business metrics. Transaction volume is growing low to mid-teens. Transaction per account has been growing, and strong international growth. Yeah, you could question number of accounts. Active accounts is dropped by 2%, right? Sure. Remember, the management has now changed. Previous management, Dan Schulman, he was very focused on increasing the user accounts. Remember, I don't know, what was it, 2022 maybe, or 23? I don't recall. When I shared, when PayPal, on an investor day, PayPal came and showed their 5-year plan. I think it was 2022. And then I shared that in the meeting, is they wanted to go to 750 million users by 2027. And so their focus was to grow the number of users, and really didn't pan out. So that they've changed the focus. We are not looking at growing it mindlessly. We want to get the current user engaged more with our services. So rather than just growing, we want to grow profitably. So I am not bothered that their active accounts are not growing, or rather, have come down, as long as they can milk the existing accounts more. They can sell more or have more transactions coming from existing accounts, right? At some point of a time, you're not a Facebook. You're not going to get 3 billion users. You have to figure out a way to make money from an existing customers that you have on your platform, which is what I think the management changed the direction, and which is where they're going on. And that's why you saw when I shared the new updates that the management is doing, they came up with the six or 5 new product lines, or I would say features. All are focused towards giving more value to and have more value to existing customers, so that they transact more with their products, right? And strong international growth. Looking at annual numbers, so those were quarterly numbers, right? So looking at annual numbers, revenue is almost $30 billion. Yeah, the growth has now come down to like 8%, 9%, right? At least better than 3%. So over the last 4-5 years, right, they've always been more than, it's like at least 3 times than what the market is pricing in currently. Free cash flow, almost $5 billion of free cash flow. And right now they have a $20 billion sitting in cash. And what else? $12 billion or long-term liabilities, which is fine. They have a $20 billion in cash, and they're generating $5 billion cash flow. So liabilities really don't bother me. If they wish, they could pay it off anytime. And good growth in EPS, almost 3.8% earning per share. And return on, look at ROIC, it's close to 12%, 13%. So let's look longer in the history, right? Currently stock is trading at 65, which is where it was way back, and this is where I think I drew the line, was 2017, like early 2017. This is where the stock was, and this is where the stock is right now. And since then, let's compare their business, what it was then and what it is now. Overall revenue, $13 billion to more than double to $30 billion, right? Shares outstanding have actually come down. So you own more of a business. The business has become more than double, And as a shareholder, you are actually owning more percent of that business. Let's look at some other stuff. Net income is up almost more than double. Let's look at other margins. Operating income, which is what I want to focus more on, because net income can be gamed. Operating income is more than double. Operating margins have been almost consistent, between 13 to 16% for last 8 years. So that's called from a consistency of operating your business. Free cash flow is up. Maybe I can consider this as an anomaly, but yeah, it's been up close to $4-5 billion always. $20 billion on the balance sheet. Return on invested capital, again, low teens. Look at the valuation ratios. The stock has become cheaper. Now it's trading at like 15 times the earnings and 15 times the free cash flow against 50 times the earnings and the free cash flow in 2017. So just by looking at these numbers, right? Again, numbers tell one part of the story, one part of the total company story. Then there is a business narrative which tells you the other part. But if I just look at the numbers, I'm like, and again, it is just me, right? You should do your own study and build your own conviction. You may find out something more on the PayPal, on the business side, why it is not being priced by the market. Right? Maybe it's a cutthroat competition in here. Payment processing, which is one part of there, it's a dog eat dog world. I've worked in this payment processing industry, and because it's a low margin, high volume business. Braintree, which is their unbranded, is one of the biggest one in that. Right? But then PayPal also own Venmo, right? Which is preferred mode of payment by the Gen Zs, which is the future one. Right? So number side, I don't see anything which is concerning. Rather, I can't find any reason why it should be trading at where it is trading right now. So let's look beyond the numbers. PayPal is not a new company. This has been a global player operating in 200 countries. They have, including China, right? PayPal own Venmo, which is could be a next growth engine. Plus, they own Braintree, which is a payment processing for big corporates. Strong mind share across the world. So if you look at PayPal, Apple Pay, Adyen, Mercado Pago, which is in Latin America, Paytm is in India. Look at the PayPal interest, from a Google Trends perspective. Still, most of the folks in the world know PayPal than others. Revenue projected to be $40 billion by 2027. They have a future play in stablecoin. Even if you ignore that, they showed a lot of innovation. The 5 and 6 which I talked about, which is after a long time see a lot of innovation coming from PayPal. They are focused on profitable growth. The whole C-suite has been revamped. The new CEO came. He got a new GM for, I think, small businesses. He got a new CFO who wants to build business profitably. Recently, they also have a positive European market tailwinds. In Europe, whatever the competition authority, they are mandating Apple to kind of move away from the closed source so that other payment processing companies can make use of Apple APIs, which will open up opportunities for PayPal. And when it comes to the balance sheet, strong balance sheet, 20 billion cash, which is like 33% of entire market cap is held in cash. That could become an acquisition target too. I don't know who would want to acquire PayPal though. Had a record Q4. Let's ignore that because that is just one quarter. But even if I'm, not focused on just one quarter, I'm not sure if we're going to have a meta moment, which is like 500% in less than 2 years. But I do think that this does deserve a look as an investor, right? So, I mean, in disclaimer, I do have a short put in this. I have been building my position on PayPal, and I still have a bullish trade on PayPal. But thought I'll come and revisit here. It's still trading at now at $62, which I feel is, looking at the business numbers, is like given up for dead. And I don't think it is dead just yet.
Yeah,
The new
only
management
problem.
is doing something good.
Yeah, just to add like a few things, Vivekji. The thing is, there's a lot of competition on the payment space, and
Yeah.
especially everyone has their own things are happening. At same time, like now, mobile phones also taken like our like Apple Pay and Google Pay, they taken a bit, and on top of it, the problem is like now the whatever you just said about the minimum, right? It is a good and bad. The pro side you said that, right? Con side which I'm hearing from other people is they're not from the payment background, they're come from the business background. With that one, they are not, they're pushing a lot. Because I worked as I was a like just as a disclaimer, I was also a PayPalian. I worked PayPal for 7 years actually.
Mhm.
And any change, if you want to do it right, and it's very hard because there's so many pathway like flows inside. It's very hard. Like when the people like the new CEO, new management always comes. Like previously David Marcus he came. I used
Yeah.
to be the CEO, and these guys came from startup and they say, hey, we wanted this change to be in 15-20 days. It PayPal world, it is 6 months is the normal. Anything if you want to change anything, if you want to get anything, so it's that kind of things. So even if they push things, like, there's a lot of revamp happened, but things still it is lagging, and the management is still thinking this as a business, not as a payments. That's one con which I seen. Another one is they let go so many good people, what I hearing. So that is also kind of like it's a good and bad. We don't know what the new water brings, but old water, old good water is gone, a little bit gone there.
Yeah, yeah, I know they let go people. I think they did one round of a layoff. I had some of my colleagues working in PayPal. Some were safe, and I know some got impacted. My ex-colleagues working in PayPal, some got impacted, some were still safe. Uh, but yeah, it's a new management. They're trying to you're right that it's very difficult to change things in PayPal. I've not seen any new innovations on PayPal until a few months ago when the new CEO came in and they started talking about incremental improvements. Yeah, those are not like game changers yet, but at least there's something that they can give to street.
Yeah, another interesting thing is that innovative, the whatever the word he used, it's silly because that was backfired him though. Actually, in the PayPal, there's always innovation. These things, hackathons, is continuously happens, but he exaggerated a little bit. So it's we should not take fully on that one. Innovation we can take, but it's like in every company. But we have to wait and see that one. But don't give too much weight on that.
Yeah.
Little bit is okay.
Yeah, I agree. Guys, position size. One lesson, the most important lesson in investing is position size. I saw on Twitter some people are complaining about how can SMCI drop 22% because they pre-announcement they didn't announce their earnings and SMCI dropped to 22% and they're like, oh, SMCI is bad, market is crazy. I'm like, no, no, no. Your position size is crazy. You've probably gone too big on SMCI and not cribbing. So position size it accordingly. This is company maybe in turnaround, but Warren Buffett said companies seldom turn around, but I don't think it's like in a turnaround though. But yeah, the stock needs some turnaround. Business has been doing better than what they were doing earlier. So I am still bullish. I'm building position. You should think for yourself in terms of what you want to do. Let me quickly go through some comments. Technically shows improvement starting initial payment platform is competitive. Yes, that is true. I mean, it's like a dog eat dog world. And I see many of some of the payment processing companies go out of business, especially the smaller ones who don't have big balance sheet. When I say smaller means the startups who don't have balance sheet and were dependent on either the venture funding or the debt funding. Both of them become very expensive in today's world. So in the fintech, bad space to win right now. PayPal has international money transfer, high margin of profit. Yeah, oh yeah, MPW. Yes, we will look at MPW later. Old tech doesn't die with Gen Z. Yes, PayPal is old tech. So I use PayPal. My daughter uses Venmo. So, straight. But they own Venmo too. It's just like FB is dead. Remember FB? FB is dead. Only Gen Xers use FB. All right, let's go. All right, guys. Yes, done.
Later.
We'll talk to you again next week.
Thank you so much. Bye. Bye, guys.
All right, bye.